Hello, my friends. It is so good to see you today. Actually, we are just going to have a heart-to-heart about what is happening in the markets right now, because sometimes the loudest noise is actually the silence in one corner of the room. Did you know that software stocks have barely moved in 2 years, while at the same time the NASDAQ has exploded up by 70%? That is a huge gap. It is like a powder cake opportunity just waiting for a spark. I remember buying oil stocks about 6 months before the conflict in the Middle East started. Not because I have a magic crystal ball, but because I could see the big money moving into that sector. I ended up being up about 60% on that while the general market was struggling. And I truly believe this rotation we are seeing in software could be even bigger. The truth that nobody tells you is that Wall Street does not always buy stocks for their quality anymore. They do not always care about the profits or the management in the short term. They care about momentum. I know you are used to the buy and hold philosophy. We were all taught that by our parents and it feels safe. But if we do not understand how the money flows today, we might get left behind. It is a bit like holding on to a favorite old coat while the weather completely changes. If you stay in software and make 0% while the NASDAQ does 70%, it feels heavy on the heart. So in the next 20 minutes, I am going to explain this opportunity to you. I will give you an index fund option and 3 individual stock ideas to think about. It might feel a bit, even though I am just here in a hotel room in London, but I want to make sure this really lands for you. So I have put together a full free research report for you at Felix Friends. OrgFay software, it is just there for you as a gift. No strings attached. Let us look at something most people are missing. Over the last 2 years, there has been a crazy mismatch. If you put $10,000 into the NASDAQ in 2024, you would have about $17,000 now. But the biggest software companies in America actually went down by about 8%. Instead of 17 grand, you would be sitting at just over $9,000, while your friends are celebrating their gains. How is it possible that software, which is supposed to be the future, is going down while everything else is going up? The answer is a narrative that is very powerful. The story is that AI is going to kill all software companies. The idea is that AI can do what software does, but better and faster. It sounds scary, right? Hedge funds have made $24 billion this year, just betting that software stocks would go down. That is a lot of money betting in one direction. Think about it, like everyone standing on one side of a boat. The boat gets lopsided and very crowded, but the more crowded one side gets, the more likely it is to tip the other way. Once people realize the boat is still floating, investing used to be like planting an oak tree. You would buy a famous company, plant it in your account, and check back in 20 years. But today the world moves too fast for that. A mighty oak can be chopped down in just 2 years because of tech shifts. So what do the pros do instead? They learn to surf the waves. They follow the money. I am actually holding a free live seminar this weekend called Why Buy and Hold is Dead in 2026. You can find a seat at Buy and Grow Net. It is about growing together rather than just sitting still. Now let us talk about the framework I use to spot these moments. I call it the rubber band effect. When you stretch a rubber band really far in one direction, it gets very tight, pressure builds up inside, and eventually it snaps back even harder than it was stretched. The stock market works the same way. When everyone is betting in one direction, they are stretching that band. Software is stretched about as far as I have seen it in years. There are 3 steps to spotting the snap. The first step is looking at positioning. This is just a way to measure how many people are betting up versus betting down right now. Way more money is betting down on software, but everyone who wanted to bet against it has already made their bet. There is not much room left for more people to join the crowd. And let us be honest, have you canceled your Office subscriptions? Probably not. Acquiring millions of users is still very hard, even with AI. The second step is looking for the crack. This is the first sign the boat is about to tip. It is when the price breaks through a level it has been stuck under for a long time. If we look at the charts, there is an ETF called XSW that has been stuck since February. It is right at a ceiling of about $160. If it breaks above that, it is like the rubber band starting to slip. When an industry breaks through a glass ceiling after months of nothing, that is a signal. The third step is the most intense part. It is called forced buying. All those people who bet the stock would go down have a problem when the price starts rising. To stop their losses, they have to buy the stock back. It is mechanical. It is not even about liking the company. It is just a rush to the exit. This can make a stock move very fast. Let me give you an example of how this looks in real life. Think of a boring company like Avis. Everyone hated that stock and thought it would crash. But when it started going up, the people betting against it were forced to buy, and it moved hundreds of percent in a very short time. The simplest way to play this is usually through an index fund. I am not a financial advisor, I am just a friend sharing research, but XSW is an ETF that holds about 136 software companies. It is a way to bet on the whole neighborhood rather than just one house. If the squeeze happens, the whole fund moves. It might be triggered by a good earnings report or just the fear of AI fading away. Now, I also promised to mention 3 individual stocks I am watching. They are CoreWeave, Big Bear AI, and Unity Software. CoreWeave is like a specialized cloud for AI training. They have data centers full of powerful GPUs. It is the premium fuel for the AI boom. They have massive contracts and a partnership with NVIDIA. The chart shows it is gradually moving up and finding its feet again. Then there is Big Bear AI. They work with the U.S. military and federal agencies on logistics and intelligence. The stock has been punished a lot, down about 70% from its highs, but the defense budget for AI is growing. It seems to be bottoming out around $3. The third one is Unity Software. This is the engine millions of developers use to build games and simulations. It has been beaten down by 87%. Talk about a heavy heart for those investors. But Unity dominates the tools market, and it seems to have found a floor around $17.50. Each of these represents a different piece. CoreWeave is the infrastructure, Big Bear is the government spending, and Unity is the creative center. Of course, there are many more layers to this, and I cannot teach you everything in one go. That is why the live session this weekend is so important to me. I want to show you the system I use every week to stay calm and focused. The old playbook might not work for individual sectors anymore because money moves at the speed of light. Now, think about how fast we went from Nokia to the modern smartphone. Money finds the path of least resistance to growth. It is really important to remember that we are not trying to be geniuses, we are just trying to be observant. We are looking at where the crowd is gathered and where the empty space is. Software right now is that quiet empty space that everyone has forgotten, but businesses still run on these tools every single day. Companies do not just switch their entire operating systems overnight because of a new AI bot. It is too expensive and too slow to retrain thousands of employees. So the underlying value is still there. Even if the market sentiment is currently very dark, we often talk about how investing is a journey. Sometimes that journey requires us to sit and wait while others are running. And other times, it requires us to move when others are frozen in fear. This rubber band effect is all about that timing. It is about having the courage to look where others are not looking. I want you to feel empowered by this information, not overwhelmed. Money should be a tool that brings you peace of mind, not a source of constant stress in your daily life. By understanding these bigger movements, we can make decisions from a place of logic and calm, instead of reacting to every headline on the news. I have spent a lot of time studying these patterns, and it always comes back to human psychology. Fear and greed are the 2 main drivers of these extreme stretches. When the fear of AI killing software reached its peak, that was the moment the rubber band was stretched the most. Now we are starting to see the early signs of a return to reality. It is a beautiful thing to witness when you are prepared for it. If you feel like you have been late to the party before, do not worry about it. There is always another opportunity around the corner. The market is like a train station. If you miss one train, another one will be along shortly. You just need to know which platform to stand on. And right now, the software platform is looking very interesting to me. We can talk more about position sizing and how to manage your risk later. But for now, just focus on the big picture. Look at the gap between the NASDAQ and these stocks. Think about the force buying that happens when shorts have to cover. These are the invisible hands that move the market, and once you see them, you cannot unsee them. It makes everything feel much less like gambling and much more like a process. A gentle process of managing your wealth. I truly believe that everyone can learn this. It does not require a degree in finance or a background on Wall Street. It just requires a little bit of patience and a willingness to think for yourself. We have been conditioned to follow the crowd, but the crowd is often wrong at the extremes. Being a little bit different can be very rewarding. I hope you take the time to download the research report I mentioned. It has more details that we could not cover in this short video. And please, if you can make it, join me for the live session this weekend. It is always better when we can talk in real time and share our thoughts. I am really looking forward to seeing you there, and I am looking forward to seeing how this software story unfolds. It is going to be an interesting few months, for sure. Stay safe, stay kind to yourself, and remember that you are doing a great job. Managing your money is an act of self-care. It is a way of honoring your hard work and your future. Thank you for spending this time with me. It means the world to me that we can go on this journey together. Take a deep breath. The markets will always be there, but your peace of mind is what matters most. I will see you in the next video, or hopefully I will see you live this weekend. Until then, have a wonderful day, and keep looking for those quiet opportunities. They are often the ones that matter the most in the end. Goodbye for now, and I will talk to you very soon.